We have with us JD Moriarty. He is an MD specializing in tech IPOs. Thank you for coming.
Thanks very much for having me. Appreciate it.
So we've seen an extremely strong activity in the IPO market up and through about July. What's going to happen in the fourth quarter?
Yeah, as you'd imagine, we get a lot of questions about this now, and it's actually kind of interesting because we really saw a very dormant summer last year, and really after the flash crash, the IPO market broadly, and particularly for tech as well, saw a very difficult June, July, and in fact August was pretty much inactive. And we saw a very strong rally after Labor Day, and some of the best windows for taking a company public were certainly in that period. This year we've seen a market that's been much stronger through July, as you note, and then really the market got caught, a number of issuers got caught in volatility that picked up dramatically in August.
Right.
I think it's getting more focused because of the high-profile nature of some of the companies that are in the backlog. And if you look at technology overall, that's the best performing group of IPOs in the last 2 years. We've got some extraordinary companies in the backlog. I think the thing that people need to keep in mind is that those are companies whose growth is not as cyclical as the broader market.
Right.
And if you look at the market overall over the last 2 years, it's really been an absence of growth that's driven the extraordinary performance of the IPOs that have come to market. So if we get back to a period of even just basic stability, where an average investor can be comfortable about that which they own, they can focus on the new companies that we want them to be excited about. Right now, we've obviously got a narrowing of that buyer base, and that's problematic for IPOs. Some stabilization, I think we'll see some people start to test the market here in the fourth quarter.
And as far as the backlog goes, I mean, are private sales an option here for those companies that maybe can't access the IPO market right now? It's
really going to depend, I think, on the objectives of the insiders and how they started their process. In many cases for technology, keep in mind they're not looking to sell the whole company, right? In many cases, and this has gotten a lot of attention this year, they've been what we call low float IPOs because people see the growth in the company. They see the opportunity. What does that mean exactly, low float? Where they've taken public a very small amount of the company. So they're selling, in some cases, 10% of the company to the public investors. So if that's your objective with an IPO process, then certainly selling the whole company in a private sale, selling the whole company in an M&A process is not really consistent with that objective.
Right.
I think there will be renewed interest on the buy side for M&A, but I think the M&A outcomes will be more deal specific.
Are private investors any more willing to engage in discussions about minority stakes in companies just to get, maybe the founders or the company more cash to expand or grow?
We've certainly seen that, but that's not a trend that's just this year. That's a trend for the last several years, with the emergence of more and more private equity and venture capital money. You're seeing people be willing to take on minority deals that they would not have looked at just a few years ago. And in fact, in a couple cases, you're seeing those same investors take stakes in public companies. Right.
Now, you mentioned to me before we went on, if we see the market stabilize, we could have some IPO activity again.
Right.
I'm curious to know which companies within the tech sector you think can go first.
Sure, and we've spent a lot of time talking about this. What are the companies that are going to kind of reopen the IPO market to the extent that it's shut, right? We've really just had 2 months here of a difficult period. It's going to be a combination of things. It's either going to need to be a company that has hypergrowth and comes at a reasonable valuation, and that hypergrowth needs to not be correlated with the broader economy, right? Companies in the tech backlog, for instance, there are certainly plenty of companies, if you think about the things that have come public this year that have done well, that have growth through adoption, growth through mobile. Think about things like Zillow's a good example of something that came public and probably isn't public if it's not, if it weren't for mobile adoption. Right. Okay, HomeAway has a predictable model, subscription model. So subscription models and things that are the shift from offline to online, where that growth is really through that adoption and not through, they're not impacted as much by economic factors. Those are the companies that investors are excited about. They're excited about them today. They were excited about them 2 months ago.
Right.
We just need to get to a point where the broader market is more stable.
Right. Now, given what we've been hearing about Groupon and how it has to perhaps readjust the way it reports its earnings. Has that shaken investor confidence at all in the tech sector specifically?
I don't think so. I think personally that's really, there's a huge amount of scrutiny on some of the higher profile companies and their initial filings. And ultimately investors are going to come to a view as to how they should view the company. And I think in some cases, companies are trying to explain how they think about the business. And so I don't think that shakes confidence at all.
Right. So you don't see other tech companies trying to, maybe looking at what happened with Groupon and saying, you know what, maybe we should readjust the way we're talking to investors at this point?
I think that they might, they probably adjust their thinking with regard to the SEC's response, but I don't think that they change their view as to how they talk to investors, right? I think that they're probably less inclined to do anything that the SEC would take issue with. It might slow down their process.
Okay, well, thank you so much for joining us here at Dealmakers.
All right, well, thank you very much.
Have fun on the panel.
Thank you.